Roller coaster, whiplash, wild ride. These are some of the terms we use to describe the week on Wall Street. It's a week that left investors wondering what to do next. For an answer, we're turning to Larry Light, author of Taming the Beast, Wall Street's Imperfect Answers to Making Money. Hi, Larry. Thanks for being here. So, we always tell people, oh, just sit tight, wait it out. But when the market drops 519 points in a day, people don't really want to hear that from me. What do you say to them?
Well, in the main, it's true you should buy and hold, and you shouldn't panic, yes. But times like this are a good time to do a gut check, to take a look at how your assets are allocated, see if it makes sense. And maybe not now, but soon, you might want to reallocate them if merited.
Well, speaking of that, so there's always a danger of making that emotional move, bad call. But the smart thing would be to get an asset allocation that, if not bulletproof, is at least resistant to these kind of falls, but also that's good enough so that when the good times start rolling, you're not tempted to jump in on the latest internet stock. How do you do that?
Well, just by being smart, by being aware. It's amazing how many people don't know what they're doing in the market. They are herded into by popular opinion. They'll panic. Or they'll buy up the latest internet stock. I think it makes sense to just really, in my book, Taming the Beast has a chapter on this, you should really look at your investments with a cold eye, a cold analytical eye, and not look at them emotionally. And look at them for the long term. Now these sound like easy things to do. Of course they're not, because when everything is going down, like especially remember the final days of March '09, it looked like it's going to keep going down into the sewer. And you had to say to yourself, oh my Lord, what is left of my portfolio might not be there if I don't do something now. That's a powerful temptation. I think at this point, I don't think we're in the sort of the situation that we were in the early days of '09 that were very scary. I think we'll pull out of this, but we can pull out of this smartly. The thing to do, I'd say, is buy good stocks. They're on sale.
And is there an overall asset allocation that you think, obviously it's got to be different for every person, but where do you start? You need a good reason to divert from what? Right.
Well, in my book, Taming the Beast, I've got a chapter on asset allocation, and it talks about these people called financial planners. I think it's really smart to have one. Now there's financial planners and there's financial planners. Some you can hire for like a 1% of your assets, and they'll run your portfolio for you. A lot of us, like me, are self-directed investors. I always have been. But I've got a financial advisor myself. I pay him a few $100 once a year or twice a year. He looks at my portfolio. He might do a computer model. There's something called a Monte Carlo simulation, which checks out my asset allocation and sees how long it possibly could last. That's a good investment.
And right now, it seems like a particularly good investment.
Absolutely.
Thanks very much, Larry.
You bet.
And thank you for watching.